Well, the SGX Nifty is down about 50 odd points, but let's get some F&O cues out of the way. Chandan Taparia is joining in now. By the way, there's a large trade that has happened in Adani Green. About 3.5% equity has changed hands in a block deal. So we'll try and get you more details on that. On Adani Ports as well, 4.1% equity changed hands. So those are some large trades taking place in the Adani group. More details in a bit. In the meantime, Chandan Taparia is joining in now to give us some cues for the day. Chandan, what are you looking at in terms of the markers on the index, and what are the individual stocks to watch today?
Good morning, Sonia. Nifty has negated its lower highs, lower lows of last 8-9 trading session and finally closed positive. The index has turned from their deep oversold territory and data setup are supportive, but it has to hold above 17,442, which is acting as a key level from last 2 days. And even earlier also the same level worked as a key barrier in the market. So I think hold of 17,442 could open the upside to a 17,620, 17,777 level. But on the contra, if it fails to hold 17,350, then this bounce back would nullify to retest the 17,200 and lower level. So I believe that 17,350 and 442 are the key level which are going to decide the trend setup over the next couple of days in the market. Now, if I talk about the Bank Nifty index, that is comparatively strong. Buy on decline could continue. We have support near to 40,350. So use any small decline with support of 40,350, and Bank Nifty has potential to rally to us 41,000. If I look at week on week basis also, your Bank Nifty is up by 2% compared to flattest movement of Nifty, which also indicates that this index is higher than VWAP. And because of the Thursday expiry, some support with buying and put writing activity could be seen in the Bank Nifty. So comparatively more bullish on the Bank Nifty than the Nifty, and Nifty needs to hold the key level in the market. Now, if I look at the stock specific positive on the ABB, we have positive setup in most of the capital goods name, whether we talk about ABB, Cummins, Siemens. Most of these stocks are doing well and giving the breakout with momentum. So recommending to buy on ABB, as the stock has given a consolidation breakout with decisive hold about 30 to 30 level, heading to its lifetime high and given a breakout of pole and flake pattern, which has bullish implication. So one can buy with a stop loss of 30 to 50 for an upside move towards 3,400 level. Second trading idea, that is buy on Maruti. This stock has remained consolidative in last 10 to 15 days. Now it's surpassing its falling supply trend line. So one can buy with stop loss of 86.20 for target towards 9,000 level. Last trading idea, that is buy on Axis Bank. As Bank Nifty is outperforming, selective banking stocks are bottoming out. So Axis Bank one can buy, as stock has seen the bullish divergence. Some put writing is visible. So one can buy Axis Bank with stop loss of 850. And here we can see the target towards 900 levels.
Okay, all right. Thanks a lot for that, Chandan. Have a good day. Well, the pre-opening rates are settling, and they're settling flat largely, so not too much happening at the moment. The Sensex and the Nifty are just a tad bit in the red. Adani Ports and Enterprises are in the green. Bajaj Finserv is having a big trade this morning. And on the downside, there's TCS, ICICI Bank and Reliance that are exerting a bit of pressure on the market. In the broader markets, of course, there are plenty of stocks to watch this morning. There is all of those, RVNLs, BHELs of the world that will benefit from those fresh Vande Bharat orders. There are names like MotoCorp that will be reacting to their numbers as well, Eicher Motors too. TVS Motor also, the domestic growth was quite strong. But let's get Anand Tandon back into the discussion now. Anand, what do you do with the IT names? Because there has been a bit of a recovery over there in not just the large caps, but even mid-cap IT. Are you buying anything right now?
Well, like I said, I think, I would stick with the larger names, and especially those which have a proven capability of being able to offer a wide variety of services to the customers. And in that set, I think, companies like Infosys, etc., are probably better positioned on a valuation versus growth perspective. That said, it's not as if the sector is going to go through, still has headwinds, which it has to face. And, we'll have to wait to see how the budgets actually evolve over a period of time.
All right, Anand, very quickly before we let you go, the cement stocks, they have been in focus. Input costs are cooling off. But after a while, in this peak season, when demand's so strong, the price increases haven't got really pushed through. What's your view on them? And do you have preference from the cement pack itself between large and mid-cap?
So I think cement is a sector which has too much attention and not enough performance. Most of these companies are trading as if they are FMCG companies, which they are not. And while there is ability to raise prices because of cartelization, there is a limit because of the fact that the market doesn't pick up the volumes. So net, given the kind of capacity addition that we are seeing, there are two actions that you can do. One is on the large scale companies. Obviously, companies like Dalmia Bharat probably still offer some potential upside. But the other way to play the sector would be to look for further consolidation. Now, to the extent that Adani Group is not going to be that much active in terms of trying to buy up smaller companies, maybe this argument has become a little weaker in the near term. But I would still imagine that trend of consolidation will continue. So companies which are, let's say, in the 3 to 5 million ton capacity are potential targets. And if one can get them cheap and one has the patience to wait for it, it's corporate action you're playing for, not really the growth. So from a growth perspective, the larger companies which are well diversified in terms of the geography they operate in still offer the better bet. The smaller ones, you're really playing a sellout kind of strategy.
Noted that view. Thanks so much, Anand, for stopping by this morning and giving us a view on a whole host of stocks. Wishing you a good day ahead. Well, the sector that was on fire yesterday was the metal space. We had good data coming out of China, and that's what spurred the metal index to the high point of the day. And you have the dollar index as well that cooled down a little bit. Amit Dixit, analyst at ICICI Securities, joins us to give us his view on the sector. Well, morning, Amit. Thanks so much for joining in. You know, when my team told me that you're joining, I was surprised because you were on paternity leave. But congratulations first on becoming a father again, and appreciate you joining in as you come back. But let's talk about the metal space. There have been price increases, I understand, and reports suggest that prices have been increased in March yet again. So on steel prices itself, could you tell us what are your channel checks indicating on price increases? And post this price increase, what's the differential between domestic prices and imported steel?
Great. Thanks, Nigel, for your wishes, and good morning, everyone. So, if you look at steel prices, my channel checks indicate that the increase could be to the tune of 1,000 to 1,200 rupees per ton for HRC. For rebars, we still haven't seen an increase. However, the fact remains that there are also indications that NMDC might increase its prices by close to 200 to 250 rupees, and that are our channel checks want to suggest. Now, talking about import parity, given the fact that Chinese export price has gone up above $700 a ton, and Far East prices are also hovering around the same range, we still are in a very comfortable range, to be honest. So, we are still at our domestic prices are at a discount to the landed price of import from China, and they are running almost at par with the Far East imports, the landed price that is. So clearly we don't see any threat of imports. On the export side, on the other hand, there is a positive news. We see that exports are running to the tune of 0.75 million tons per month. Which is like they were kind of 0.3, they tapered off to 0.3 in the export duty regime. So they are springing back, and that gives our steel companies an optionality to sell in domestic market or in export market. One last thing that one has to keep cognizance of is that the differential between export prices and domestic prices has narrowed down to a very large extent. From 20% discount, the export prices are running at around 2% discount to the domestic prices. So clearly, domestic companies are indifferent to selling either in domestic market or export. So that's a win-win situation for the domestic steel companies, at least at this point in time.
Okay, so win-win situation for domestic steel companies. Amit, I have to ask you about Vedanta because it's back in the limelight for the wrong reasons, perhaps. I mean, that high debt of almost $12 billion is something that's, keeping investors on tenterhooks. But tell me, on the stock itself, what's your view?
Sonia, I have to apologize here. Vedanta is in restricted list for us, unfortunately, so can't give my views.
Okay. What about the other non-ferrous stocks? What's your preference between ferrous and non-ferrous?
Yeah, so we at this stage we prefer ferrous. The reason being that we believe that the spreads in steel are bottoming out, and given the fact that, as you mentioned in the beginning, that the China factory data is good, and there is going to be this 2 sessions meeting in next week, we do expect some policy support. And given that the initial indicators, the lead indicators that we see of real estate, they are settling. So clearly, and the fact that April to June is peak in terms of real estate in China. So from that perspective, we really see that, the spreads are likely to bottom out. So therefore, ferrous remains our preference, relatively speaking. Although in the ferrous sector, we are picking and choosing few stocks, but still ferrous remains relatively preferred bet at this point in time. In non-ferrous, Nalco remains our key pick. Yeah.
Right. This is not so much a question about fundamentals, which you've outlined very nicely, but what matters more for stocks? Dollar rising is generally perceived to be negative for stocks. On the other hand, you've got this China reopening and coming back strongly. What matters more at this stage to these stocks where they are? Your opinion?
Well, it's the interplay of both the factors. You put it rightly. The dollar index weakening has been good for the stocks, but I think all eyes are on how China opens actually. And as I mentioned during my last interaction, also that one has to take it with a pinch of salt. One has to be really patient about it. But as I mentioned, that now we see that there is some semblance of hope, at least there's a glimmer of hope, and we see that the that 2 sessions particularly, I think next week, that would be very, very critical. And given the fact that Chinese officials have said that they would focus on growth if they are able to do it with some policy support, how much and how long, these are the critical factors, because of late we have seen China to be very, very peevish about the inflation. So how long and how much, these are the key questions that we would like to seek answers to.
Okay, finally on NMDC, I wanted your thoughts. What is the long-term strategy there?
No, so NMDC, well, we saw the volume data yesterday. Again, if you look at the volumes on YOY basis, they are a little bit down, but we see the trajectory being right. And the fact that for NMDC, global prices matter a lot. The stock movement is totally correlated to the global iron ore prices. And we do expect global iron ore prices to go up from here, at least for the next 3 months. So NMDC, I think we have a target price of 130 rupees. And we believe that the stock is well set for that kind of return if somebody is interested.
Okay, Amit, we leave it at that. Thanks a lot for joining in and taking us to your views on the metal space. By the way, RVNL is definitely the stock of the moment. It's up 6% right now. It's emerged as the lowest bidder for the Vande Bharat order. So that one's really piling on the gains as we speak. BHEL and Tata Titagar wagons also have emerged as bidders. So I think L2 bidders. So, those stocks are also in the green right now.
Absolutely. There are some large block deals which have happened, which we want to just address in the Adani Group stock. So, in the case of Adani Green, some 3.5% equity has changed hands. These are very large transactions. In the case of Adani Ports, 4.1% equity has changed hands. In the case of Adani Transmission, that number is about 2.5%. This has happened in the block window. We're trying to ascertain, who are the sellers and who are the buyers. But this is, the very large blocks which have happened in 3 of the Adani Group shares this morning. Remember, last 2 days, stocks have seen a tremendous amount of relief, led, of course, by Adani Enterprises, where the pressure was the most. But over the last 2 days, more stocks in that group have been higher as compared to lower. So will be interesting to see. The other bit of information, especially on Adani Enterprises, was that not Enterprises, but there was a news report doing the rounds that the group has tied up $3 billion in financing from a sovereign wealth fund. And I think later in the evening there was a clarification that that is not the case. So they kind of refuted that particular news report. So again, to take on board. But sharp correction and a bit of relief over the last 2 sessions. As I said, we've reached out to the group. We are reaching out to the Adani Group and figuring out where these transactions or who the buyers and sellers in these particular blocks are. But I think it's 9:12, so 2 minutes late for the 9:10 calls. Mitesh is with us, and so is Sudarshan. Mitesh, what do you have? Morning.
Good morning, Prashant. I'll go with a buy on Federal Bank. Let's say 50 paisa rupee dip would be a good entry point, and stop below 130 for targets of 140.
All right. And Sudarshan, how about you?
The 9-10 trade would be a buy in MCX, buy with a stop under 1405.
Okay, all right. Thanks a lot for that, Sudarshan. By the way, on all these 3 companies, on ports, the promoter holding is around 65%, transmission is around 74%, and on Adani Green, it's around 61%. So we'll wait by to see, who was the participant in that particular large trade. Well, Vivek is back with us before market opens to tell us about real stocks. Vivek, go ahead.
Well, that's right. This is regarding the Vande Bharat train set orders. 200 train set orders is what yesterday the bidding opened for, and the details have emerged. So we're talking about both the L1 as well as the L2 status. The L1 status has gone to a consortium of RVNL with a Russian partner, and the estimated cost of their particular bid is 120 crores per train set. BHEL in consortium with Tata Wagon has emerged as the L2 bidder, and the estimated cost for their bid was 140 crores per train set. Now, the estimated order size, the total order size for these 200 train sets is almost 58,000 crore, and it's split, between it's split in two parts. One is for the manufacturing of the train sets, and the other one is for the operation and maintenance part. So 26,000 crores is upfront, for the train set manufacturing, and the remainder 32,000 crore will be paid over a 35-year period for operation and maintenance. Even in the 200 train set order, 120 train sets will be manufactured by the L1 bidder, that is RVNL. The L2 bidder, if they match the L1 bidder's price, they will be able to manufacture the remainder 80 train sets.
Thanks a lot for that. I'm also watching out for the auto names, mostly the two-wheeler names, because the domestic sales growth has been pretty good across the board. Bajaj, Hero, TVS and Eicher Motors have reported good growth in domestic sales this time. Bajaj's domestic sales were up 36%. Hero saw about a 10% growth in domestic sales. TVS domestic two-wheeler growth was about 28%. And Royal Enfield's total sales went up 21%. So that's the theme really. But let's listen to the commentary. So Hero MotoCorp says that consumer sentiment is definitely improving. But Bajaj is not so sanguine. They say that the domestic demand is still quite soft. And it seems like the post-COVID pent-up revenge buying is now tapering off. And as we're heading into perhaps what could be a weak monsoon season, things could get hit more. So, that's the commentary that's coming in, that perhaps the worst of the fall is not over. But let's see what's happening with the market opening. The first tick should come through very soon. Well, there you have it. It's flat with a bit of a negative bias, nothing alarming. Absolutely quiet, 17,440. So the pullback that we saw yesterday, the Nifty is holding on to the gains at 17,400. The mid-cap index is now absolutely quiet as well. The bank Nifty is just splitting between the red and the green line. Bajaj Finserv is definitely your stock of the moment. SEBI has approved the company to start its MF business. So Bajaj Finserv is up in the green. Tata Steel, L&T, Eicher Motors, Hero MotoCorp. Both Eicher and Hero MotoCorp are in the green post good domestic sales coming through. M&M has been gaining ground as well, both on the CLSA upgrade yesterday as well as good set of numbers coming in on the tractor and auto sales side. Apart from that, Hindalco, JSW Steel from the metal space are also doing pretty well. On the downside, Adani Group stocks once again getting hit. Adani Enterprises, Adani Ports under pressure, down anywhere between 2 to about 10% Adani Enterprises knocked out of shape, 10% gone there. IT stocks also under a bit of pressure. HCL Tech, TCS, Infosys are dragging their feet. Wipro is also down. Infosys is now down almost 1%. Well, you'd have to say that it's about extending to about 0.5% to 1% fall. So nothing alarming in the technology space either. HDFC Life has been a big loser. In fact, this year, HDFC Life has lost 14% of its value. It continues to trend in the red. So watch out for that. Nestle, Ultratech Cement, Kotak Mahindra Bank are a couple of other stocks in the red. So very quiet opening. Remains to be seen which way the market goes for now. It is just flatlining. But Adani Group stocks are really, center of attention this morning with big losses coming through over there. And on the upside, Bajaj Finserv is batting for the bulls. But what about the broader market?
Well, the Vande Bharat, order, Sonia, that Vivek just told us about. So RVNL should be in focus, BHEL as well as Tata Wagons. Let's pull up all those three stocks because that could potentially be in more business for them. All of them, they are flying away as we speak. A couple of other stocks that are moving around. You have HAL, the cabinet has approved buying. Trainer aircrafts were around 6,800 crores odd, so that one as well. Yesterday it had a good run. Today as well, it's up close to around 0.8% on the back of a 4% rally that we saw yesterday. Some unconfirmed reports indicate that Bharat Forge as well could be in the reckoning for a big order for artillery gun system. So that's not yet confirmed, but for the time being, I think that one as well opened up with a gain of around 0.8%. A couple of other notable stocks that could be reacting to news. Suntech, well, they've signed an exclusive lease deal with Upgrade for its premium commercial project. So that as well is up close to around 2.5% odd. Not too bad an opening to kickstart trade. The Adani Group stocks, as always, are moving around. Adani Enterprises, after the big run that we saw in the last couple of days. Well, that's opened up with a cut of around 5%. I'll tell you what, just a few minutes ago, it was down close to 10%. So that's actually recovered from the low point of the day. Good start, Prashant.
Nigel, yeah, good start. And by the way, Adani, yeah, you're right, 10%, it was limit down 10%, it's recovered. And there is buying emerging in other stocks as well. So Adani Power is on your screen. Adani Transmission is up 4%. So stocks at about 705. Then there is Adani Green, I think, which is limit up. That is up 5%, the daily limit. Power, of course, we already mentioned. Adani Ports is the other one, which has also come off the low point. The low today was 585. Stocks recovered about 15 bucks from there. And I think there is a similar picture you will see on some of the other names. Adani Total Gas is down about 1%. I think there also there is a big recovery from the low. The low today, the opening low was 681 and about 20 rupees off the low on Adani Total Gas as well. Now let's just take a look at the broader markets. The Nifty is down about 20 points, but let's see if there is more on the broader space. Bajaj Finserv should come up on your screen. That's up 3%. Stocks at about 1384. It's the second biggest volume-led gainer. I think RVNL we mentioned earlier, 9% pop on RVNL. L&T is up about 1 1/3%. There was Sonata Software, which saw a large move yesterday. This morning, it starts 3% higher. There's Angel One, which is up 3.25%, 1,035 on Angel One. Credit Access, the MFI, the microfinance company, 985. Stock starting about 2% in the green. KNR Construction, G Shipping, and Dreamfolks are some of the other names. I can spot Ircon as well, but there is no broad-based big momentum in the railway infra names, at least not backed by any meaningful volumes at this point in time. TCS is interesting. I mean, TCS closed exactly at an important resistance level. There's a sharp downward sloping trend line from the recent highs to, they're basically joining the highs of the recent fall, and it left exactly there at about 33.79 or so, and it's starting lower, so that's a important one to watch out for. Infy is down about 1%. Maruti is down 1%. Triveni Turbines 20% in the last 2 days. That is pulling back about 5% on decent-sized volumes at this point in time. Actually, lots of stuff moving around, both on the upside and downside. The Nifty not doing very much. Flat, down about 22 points. Sonia.
Absolutely. Just two themes that stand out on RVNL, right? This stock has, I think in the last 3 years or 4 years, done nothing. It was languishing at 20, 25, 30 for the longest time. And this year, it's sort of ballooned. Just look at that in the last 12 months, what's happened to RVNL. So I guess these are, case studies on how your patience gets tested, and then at some point the flip comes. I don't know if it's sustainable.
Studying patience, studying also luck, right? Otherwise, if you are a very active investor and you look at the stock over every couple of months or every couple of years, and you say, well, 3 years, 4 years, not done very much. More likely than not, you'll sell. But it's
also an opportunity cost. So you can look at it both ways, right? If you had stuck with RVNL for 3 years, you'd have done nothing with that money. So it's suddenly just...
Yeah, no, absolutely. Combination of a couple of things coming together. But yeah, 35 points lower, 17,415 is where we are at this point in time. Andrew Holland is joining us, CEO at Avendus Alternate Strategies. Andrew, great to have you with us here. Thanks very much for your time. So the US 10-year is now sort of hitting 4% levels, Andrew. Market expectations of how high rates will go have also moved up substantially. In this kind of an environment, what's the prognosis for the Indian market? We had a very interesting chart which someone put up for us. Basically, the correlation between the US 10-year and the MSCI Emerging Market Index, absolutely perfectly inversely correlated. Go on, Andrew. Morning.
Morning. So you're right, Prashant. The difference over a month in terms of expectations has changed completely, hasn't it? From maybe the Fed going on hold or maybe 25 basis points in March to now possibly 50 and more after. So the data is not supporting the market's optimism that the Fed will go on hold soon. So that kind of, with what you're saying about the 10-year bond yield at 4%, it kind of puts us in that no man's land a little bit, right? In terms of a market still optimistic, will the Fed go on hold? But growth is still, quite resilient, both in Europe and the US. And obviously with China reopening, that brings a bit more optimism. So that kind of stagflation theme, or narrative, might come at some point. And I don't think the market's kind of expecting this. So it's still working on the optimistic side of the equation with the Fed. But if that's not to be the case, then obviously, earnings forecasts, as always, will have to be brought down if the Fed remains as hawkish as it is. What does that mean for India? It means that probably the RBI in April, might go, higher and stay there for longer, which is not great for our growth and probably would mean again earnings revisions, for at least for the first half of the year. And therefore, there's no real catalyst for our market because globally nothing's happening, and locally there's nothing really to kind of get excited about. I know that obviously the budget was good, and we'll see the benefits of that in the second half. But it's going to be that kind of tricky first half. Is probably not going to be great for our markets. At best, we can maybe tread water around these levels a bit lower. And then the second half, I think, will start to get better as growth starts to pick up and earnings forecasts get revised a little higher from where we are today.
Okay, we can only sigh at that, right? The first half is not going to do anything for investors. I mean, I take your point on board. It has been a struggle, actually, to get to any kind of alpha, to generate alpha in this market has been hard over the last 1 year. But Andrew, what about some spaces that are seeing a recovery? Within consumption as well, domestic two-wheelers are coming back, although not at the same pace as what they were, in, say, 2018, 2019. But nevertheless, double-digit growth is coming back over there. Any of these sectors that you like in consumption?
No, we do. We like we like FMCG, we like domestic consumption, we like banks. So I think, because of what I've just said and what we've been seeing in the first kind of couple of months of this year is just being very rotational in terms of, where you're going to make your money in the short term. So, for example, if the Fed is going to go for 50 basis points and continue to be very hawkish, maybe tech stocks in the US, take a leg down from here, which would have an impact on obviously our IT sector here. So I think those are the things which are going to play out in the first half. So it's going to be, whilst the index might not do anything, might kind of see a fall from here, the rotation is going to be a little bit killing for investors because you're going to think you're in the two-wheeler space and you do well, but then another sector comes along and money moves out. So it's going to be a tricky, rotational, difficult few months ahead, I think.
All right, Andrew, what about a couple of these spaces like the railways as well as the defense space? There's likely to be a big push from the government out there. Any themes you like from this space?
So Nigel, I don't think the themes that we talked about have gone away, and that's where we're really kind of concentrating our kind of bets in that defence, renewables. We know that's going to be a global investment cycle, and that's going to continue in India. So we're not moving away from that. We're not moving away from the fact that there'll be in terms of infrastructure spending more on kind of factories and smart offices where India can provide some of the security kind of problems that we've seen in terms of supply outside of China. And those are the things which I don't think are going to go away from us, as well as the whole domestic consumption theme in terms of travel, hotels. It's things we were talked about before, and I just can't go and move away from them to try and find anything more exciting at the moment. So that's where we are, and I don't think we should just kind of follow this rotational kind of market around in the next few months, and just stick to where the long term and short to medium term themes are going to play out over the next few years. So that's where we're concentrating our minds and bets, because that's the best place to be. Otherwise, you're really kind of following what the next data point is going to come from the US. Will that affect interest rates? If it doesn't, if it's positive, then your whole sector thinking changes. So stick to the themes that will play out despite interest rates going up or down, will play out over the next few years.
Okay, by the way, the market is under pressure now. The Nifty is giving up on its gains of yesterday. It's down almost 50 odd points. The Sensex is also moving lower, 170 points. I think the drag is coming from the Bank Nifty, which is down about 100 points. Actually, it's not just banks, it's IT as well. So these two leaders, Infosys, TCS, Axis Bank, are all under pressure now. Even consumption. So a bit of that froth, a bit of that steam that we saw yesterday is coming off. Andrew, before we wrap up, I mean, Nigel and me are very interested to know who you're betting on this time. You know, both of us are Arsenal fans, and the trajectory has been really good so far. You think Arsenal's taking the cup this time?
You know, Andrew, we have had a tough last few years. So Sonia and me are, grinning. What's your take? Are we going to go home?
Yeah, well, I mean, we haven't won something for a long time, so it's good to see that Arsenal are doing well after a very long time. I did watch that program, last year. Last year it was, when Arteta took over and the difficulties he had. So I think his long-term plan is paying off. Obviously, being a Manchester United supporter, I would hope you'll slip up at some point and we can overtake you. But so far, doing all the right things, eking out those results. So good luck.
So, Arsenal reminds me of the RVNL stock. I mean, did nothing for years, but now it's just sort of zooming. It's what we just spoke about, so it came to my mind.
All right, Andrew, great to speak with you. Thank you very much for your time. It's always a pleasure having you with us here on the program. Thanks indeed. Look at just two names I want to highlight. By the way, the Nifty is down 70 points, which means that we are at the low point of the day. Which also means that we are around the 200-day moving average. I think we should be around there. So as of yesterday's close, the 200-day for the Nifty stood at 17,392. We're at 17,374. So whipsawing around the 200-day over the last two sessions. Today is the third day that we're doing that. Two names specifically. One is TCS. That one is actually selling off pretty hard, right? 1.33% lower. That's a $50 cut on TCS. So watch out for that name. The other one is ITC, and this is something we put out day before yesterday on Market Laser. Now, the thing is, ITC was one of the stocks which was providing support on down days to the market. It generally had momentum, and it's a large weighted name, but technically it is not poised very well. So that's kind of one important leg missing. For the market to find support, and an important one for bulls in that sense. The stock still is up some 14% for the year, while the market's not done very much at all. Sonia.
Okay, so let's see which way it goes. For now, market is not looking good, down to the lowest point, down about 75 points on the index. But Manappuram Finance is on our radar. Gold financiers are losing business to banks. At least that's been the narrative for a while, although Manappuram Finance doesn't believe so. Their assets under management have declined sequentially and year on year. The management told analysts that by Q4, some of the bank customers will return. Let's discuss more on this with VP Nandakumar, the MD and CEO of Manappuram Finance. Mr. Nandakumar, good morning, and as always, great chatting with you on the show. You, of course, give us a sense of your business, but also a sense of what's happening in the lower strata, in the rural economy. The last time when we spoke, you said that the demand from gold loans is strong, and a lot of it is coming in from the bottom end of the pyramid. But now the expectation is that as interest rates move higher, as growth slows down, the rural or bottom end of the pyramid could suffer. What is your sense of which way the growth could be, and are you also concerned about a slowdown?
See, sequentially we are growing only. Our consolidated AUM is steadily growing only. So it has not declined. Only one portfolio has shown some decline, but it has come back now. As I have told earlier, the rural demand has picked up, and we have seen growth in that segment also, which were not growing. So now all the segments are growing. Rural situation is better. Bottom of the pyramid or lower end of the pyramid, they are doing better.
So in terms of a growth, you're saying that there is no decline. The numbers are showing otherwise. I mean, the AUMs are down 9% year on year, at least in the quarter gone by. But what kind of a growth do you see for the rest of the year in FY24? Even if there is growth, do you think it will be slower than what you've seen in the past?
No, see, last quarter, our consolidated balance sheet has grown by 4%. Even the quarter before that also, it has not declined. So only one segment in our portfolio, gold loan, has shown some decline, as told in the last meeting, our last conversation. Our customers are mostly from the lower end of the pyramid. Their demand has not picked up during those days. Now we see a lot of progress in that, and we are growing. That portfolio also we are growing now.
All right, Mr. Nandakumar, you have grown, yes, in mid-teens on the gold AUM for the last few years. But in the last 3 quarters, we have seen a degrowth on your gold AUM, right? So the question is, in Q4, will we now see a growth?
See, two things here. One, on the consolidated book. Consolidated book, we are growing only. We are not.
Right. No, Mr. Nandakumar, let's focus first on the gold AUM. On gold AUM, I can clearly see from around 200 billion, it's come down to around 181 in Q3, right? Now, on that base, will you grow in Q4? Let's get the gold AUM out of the, out of the way first. Is there going to be growth in Q4 in comparison to Q3?
Yeah, now we are getting growth now. I told in the last meeting, gold loan, our customers are mostly from the lower end of the pyramid. Their spending has not come back. So those days now, situation is gradually reversing. We are seeing growth.
Good to see. Yeah. Just one more point I wanted to focus on. Your yields are close to around 22%. And the banks, they have suddenly seen this as a big opportunity. And their yields are around 12% odd. So what is your strategy? Will you look at lowering your yields and go for growth, AUM growth, tonnage growth on the gold portfolio? Could you tell us, what's the strategy from here on?
See, there are majorly 3 lenders here. The major part of the lending is happening from the unorganized sector. Our customers are those migrating to us from the unorganized sector, where the average ticket size is around 50,000, 60,000 only, and the duration is lower than 6 months. Where what is important is the one availability, we should be available for a longer hours, and also lesser holidays, because these customers come and they wanted to go in 5-10 minutes because they cannot afford to lose their daily wage, or even for redemption in 3 months, 4 months, etc. They cannot afford to. So if they always calculate that also, and they find coming to an NBFC where there is a quick service, and also even on Saturdays or starting the commencing operations in the morning and late afternoon also. That is what they look at.
Okay. Mr. Nandakumar, good morning. I had 2 questions. One, just to finish up the loop on gold loans. The other is microfinance. On gold loans, the yield argument has been muddied a little bit. Competition is something we've been discussing for the last 6 months with both you and Muthoot, from banks especially. By the way, the Muthoot management also, the last time they were on the program, I think about 15 days back, said that the peak of competitive intensity is perhaps dropping off a little bit. Banks are realizing that it is not a cakewalk. And we've got commentary from you now as well. The argument on that gold loan is a no credit cost business, zero credit card business, that still holds, right? There is no change in that. LTVs and gold loans, etc., are very comfortable. We will not see anything there, right? No under recoveries or anything.
There is no under recovery. There was not no under recovery in the past. Also, we have been in the business for decades together. And what I have been holding, our customers are, bank customers are from different segments. Our customers, their demand was less post-COVID, even post-COVID. So it is picking up now.
It is picking up. Got it. And you're saying that in Q4 so far, the gold loan book is higher sequentially.
Yeah,
there is growth, right? That's what you're saying. After 3 quarters of degrowth.
Yeah, it is.
Got it. Could you tell us what is the performance on the microfinance side? Which is the business which has been doing very well for you? In the 2 months of Q4, what's the performance?
Last quarter, we have reported a PAT of around 70 crores. This quarter, we expect that to grow. And slowly, it is coming back to the pre-COVID level. Collections good. Yeah.
Okay. Mr. Nandakumar, the other big thing that the street is awaiting is any kind of clarity on succession planning. The last time when we checked with you, you said that in the next couple of quarters, you will identify a successor. Have you been able to do that? And what are you looking at in terms of a timeline?
Now, we have made some senior appointments internally. One was, an ED is appointed from the family, and some senior executives were also promoted because we are ensuring that there is no depth as far as succession is concerned. So at the right appropriate time, the board will take a final call.
Mr. Sumita, Mr. Nandakumar, your daughter, right, has been...
Yeah.
Has been, is she one of the potential successors?
Yeah, she is also one of the potential successors.
By when will we, what is the process which will be followed to take this forward? And by when, what are the timelines?
She has been handling online gold loan, and she has handled that successfully in the past. And now she is appointed as the executive director. And and she is groomed for taking the position of the CEO later, along with one or two senior executives. And,
by when will you take this decision, sir? A timeline, if you could give us?
Yeah, maybe in another 2 years.
Now that, okay, we'll get clarity on that in the next 2 years or so. Just wanted to ask you what. Yeah, just on the couple of business aspects before we let you go, your cost of funds have been moving up. You know, the last quarter as well, it was around 8.1% odd. For this quarter, how much higher will it be?
No, for us, the average cost of borrowing has not moved up. Why? Because we have redeemed the high cost borrowing through the overseas bonds, etc. So there is a slight increase in the market. Our overall borrowing cost has not gone up.
Okay, sir, just one last question. I didn't get a number on what the gold loan growth would be. You said that the decline has been arrested and you are expecting things to improve. But are you looking at a single-digit growth in gold loans in FY24? Could it rise to double digits? Any indication of that?
Yeah, we are expecting 10 to 12% growth annually. So, sequentially, so our annual growth target would be reflected from the sequential growth also.
Okay, so for FY24, your gold AUM will grow by close to 10%, double digits?
No. I'm saying
you're just talking about this quarter.
Yeah. This quarter, you see, our annual growth in 24, what we expect is around 10% growth. So the momentum for that has caught up.
Okay, so 10 to 12% growth in FY24 in gold loans is what you're expecting. All right. Mr. Nandakumar, thank you as always for joining in and fielding all our questions. Appreciate your time. That's Manappuram Finance saying that his daughter is being groomed to take up the role of the CEO of Manappuram Finance, and in the next 2 years, clarity will emerge on that. The worst of the fall in gold loans is behind them, and a 10 to 12% growth is what they're expecting in gold loans for FY24. We'll take a quick break. Markets still under pressure. We'll be joined by V. Jagannathan of Star Health and Allied Insurance to talk about their business outlook in just a bit. We'll also connect with Chirag Parekh of Carousel to discuss their business outlook going forward. Stay tuned.
ए लड़की तेरा नाम क्या है पूछने वाले